Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 1% there on the S&P. It looks like Nasdaq is down about the same. It looks like a red day. Looks like all these sectors are down more than about 1% here. Spider, Q, Semiconductor, Dow, Russell 2000, Transport, and the banks. Energy is down about 2%. Biotech is down 1.3. Healthcare 1.5. Home builders held up better today. Same with the utilities and the retail. Emerging market is actually positive today, despite the fact that pretty much all sectors are red. Bitcoin's down 3.5%. Gold flat, but silver and miners especially did get hit today. Dollar's flat, oil's down, treasury bond up a little bit. VIX obviously popped quite a bit with a down day today. So let's stick with the Spider 65-minute chart here. And so, so this gap, with this down gap, I think there was a lot of a shenanigan that happening here. And this is a classic shenanigan, right? So we initially gapped down and quickly that dip was bought up. And this was, looks like, Monday, right? Today's Wednesday, right? So this is Wednesday, Tuesday, Monday. So this was gapped down in just first hour. We found support very, very quickly, and then we just marched higher all day long on Monday. And then it looks like a lot of people might have chased this to the upside. And then, you know how the market is. If you're too intimate in the short-term fluctuations, market has a way to get you, right? Market has a way to punish you for chasing. And I think that's kind of what it was yesterday morning. So we gapped down, held on that short term, but quickly you can see here on that secondary short-term moving average, we found support. And then we made a move to the upside. And then this is where it closed. It looks like yesterday. And today we opened flat. This is where it opened, right? First, 1, 2, 3, 4, 5. No, actually, this is where it opened. So we actually, this is where it closed yesterday. This is 1, 2, 3, 4, 5, 6. So yes, this is where it closed. We actually gapped down today at open. This is where it opened, gapped down, right on the short-term moving average. Quickly, that dip was bought and got up here on the second hour. And then third, fourth, fifth hour, there was some battle happen. You can see that high wave spinning top candle with the long, upper wick there and lower wick. Kind of that battle going on here. And you can see this gap area providing resistance here on Monday and here on Tuesday, here today. So with that spinning top, we lost that short term, and then it looks like people just panicking. All that short term trade stops are getting taken out. Probably people chase it up here. They couldn't handle it anymore. And then towards the end, towards the last hour, people bailed. And pretty much you can see that. You can see the story here. Last hour, the long red candle represents people just bailing, selling, getting rid of it before the day is over, and all that stops are getting taken out right on that that support, potential support right here, and then the secondary short-term moving average. So if I zoom out, so I think with this today's price action, this is my short-term moving average, secondary short-term moving average. We've lost both of those with the last hour's price action. With that, I do have to give benefit of the doubt to the sellers. However, if we zoom out though, can we find any potential support level, right? Because in the short term, the sentiment is going to shift pretty quickly back and forth. And we talked about this. But first of all, we just feel this gap, right? We just feel this gap right here, and we've been talking about the gap. When gap is open, should there be, and I said this last time, right? Last time back in August 5th, I said when this gap was open, gap is deployed by the bull. Should there be any kind of shenanigans, should there be any kind of slide going forward, that gap is gonna provide support. So that gap is filled. So with that, there should we can expect some kind of a short-term oversold bounce, like a micro-term oversold bounce. That doesn't mean that bounce is gonna be a true reversal, right? Because if we do see a bounce, you can see that my secondary short-term moving average and then the first short-term moving average, they're all kind of curling down. declining here. So some of those levels going to act as resistance unless buyers going to do some sort of a V-shaping crazy move like we've seen something like this. Unless we see something like that, if we start to fizzle, it starts to take too long, kind of hang around too long, these short-term moving averages is going to act as resistance. And then, there's a chance that this to kind of come down, go up here, meet that, and then maybe trying to retest the next gap, which is at 436. Again, unless bulls can reclaim the short-term moving average as quickly as possible, as we talked about here, right? And you can see here, things were pretty hectic. We gapped down, and then you can see how quickly, just in 3 hours, bulls were able to reclaim that short-term moving average. And then for about 2-3 weeks, we did see that bullish run. So that's what bulls need. Bulls need to kind of change that momentum as quickly as possible. If it fizzles, if it takes too long, I think the momentum in the short to micro term, the momentum is to the downside. But overall, are we in the midterm? Are we bullish or bearish? Because if I zoom out even more here, you know what I mean. It's not like we haven't seen. I mean, we've seen these games, the market play. You can see that. Oh my God, new all-time high. People are chasing. Boom, right? And you can see right here. Oh my God, new all-time highs, right? Boom, right? This is why you do not want to chase, right? So it's not like we haven't seen something like this before. I mean, this entire year, this has been the story. We make a move, and then out of nowhere, we see some sort of a big decline, and then all kinds of people coming out and saying that the this market is topping out, but they forgot that they've been saying that the entire year. So I think, I'm not quite ready to say that this is the market top and we're going to see a 10-15% corrections. But this gap here, this gap down at the peak, it's just somewhat concerning, but same thing happened here though. You can see that there was you can see if I do this, you can see this looked somewhat concerning also. You can see that there was a gap here. And then it's not like we haven't seen this type of move before. I think this was that gap down here. There was a gap down right here also. You can see there was if I just move this right here, you can see like even here, this looked like, a lot of people thought this was topping pattern, right? There's a gap and then another gap down. We lost both of the short-term, long-term, or both of the short-term moving averages. It looked like that was to be potentially top, but see how quickly. And then there was that kind of that shenanigan bull trap there, and then we saw that downturn, and then it just sideways, and then it got right back up and made new all-time highs, and it got into 447s, on Friday or Monday. So something that I've been saying this entire year, let's not get too ahead of ourselves. People have been calling top this entire year, not even including late last year, right? Last quarter of last year. So it's too early, I think, to say that this is the market top. People who's been calling market top this entire, they've been pretty miserable with their standing on that. So I do want to say, short term, micro term, I think sentiment is gonna be hectic and bearish as long as this down gap is gonna be the key. Bulls, if they want to turn things around as quickly as possible, bulls need to fill this gap as fast as possible. You can see right here, that down gap, how quickly it got filled. That's what bulls need to do to kind of change this short term sentiment quickly. If not, this down gap could make things hectic, potentially even remainder of this month if this gap doesn't get filled as quickly as possible. Next support at 436. If we don't find support here because the gap just got filled, 436 the next destination. That's a gap area right here. And you can see this few times bears attempted to fill that gap, they failed. So there's some weight in this level, that 436, 435. My midterm moving average haven't been retested since back in mid-July. So the worst case scenario, that's the midterm moving average coinciding with this gap area. So some of these, I'm going to put all these levels right here. Some of these areas, should there be more shenanigans, should there be more decline, needs to go through 436, 435 first, and the next one is 430 to 431. Let's check out that oscillator and see if we can extract any more information. So you can see we initially saw a cross right here, and that's because the first 3 hours of momentum we saw, late last late trading hours of yesterday's action and this morning. But you can see with this downturn, it's trying to cross back down. Things can be interesting here. Let's just say we see a gap up and then we see a move like this, right? Let's just say that's what we see, right? And this thing kind of crosses back up here. This could actually be some sort of bullish divergence. So, I mean, it's too early to say. I think this is a good example right here. You can see that's a lower low. And then, yeah, it's a slight, you can see it's an equal low, right? You can see that's a lower low on the price. Then oscillator is kind of an equal low. So it's not a real bullish divergence, but it has that characteristic, the properties of bullish divergence, and we initially made that move. So if that's, if bulls can't turn around as quickly as possible and fill this gap, I do see 436, 435, and then this thing probably gonna come back down to the oversold level. Currently sitting right on that first level of support, because we did find the support right here in this vicinity. So let's see how the market plays out. Gap just got filled. We might have a micro term support there. Best case scenario for the bears is to probably gapping it down one more time just to scare everybody out, and then go down and fill this gap at 435. So bears gonna fill this gap at 435. Bulls gonna fill this gap at above at 436 or so, 437. So I think it's gonna be the battle of the gaps. Is this gap's gonna get filled first, or this gap's gonna get filled first? Whoever feels that either down gap or up gap, it's going to partially win this battle for this month. So it'll be interesting how the market plays out tomorrow, remainder of this week, and next week. I'll come back for you. Enjoy your evening and good luck trading tomorrow.